Economy. An economy is the system by which a country's goods and services are produced, sold, and bought. It's the sum of all economic activity within a region. Macroeconomics. The study of economics at the nation, state, and global levels. Microeconomics. The discipline at the corporate and individual level. Utility. The measure of satisfaction or happiness a customer gets from consuming a good or service. Diminishing marginal utility. The concept that as a person consumes more of a good, the additional satisfaction from each extra unit decreases. Opportunity cost. The value of the next best alternative that's given up when a choice is made. Monopoly. A market structure where a single firm or producer controls the entire market for a product. Interest rate. The cost of borrowing money or return on an investment. Exchange rate. The value of one currency in relation to another. Tariff. A tax imposed by a government on imported goods and services. Gross domestic product. The value of all goods and services produced in an economy in a year. GDP per capita. A country's gross domestic product divided by its total population. Imports and exports. Imports are goods or services bought from a foreign economy, while exports are goods or services sold to a foreign economy. Fiscal deficit. The difference between total government expenditure and the amount it raises in taxation. Government borrowing. The amount a government has to raise in the financial markets through bond issuance, gilts in the UK, treasuries in the US, to pay for deficit spending. National debt. The accumulation of these deficits incurred over the years. Trade or current account deficit. The amount by which the value of a country's imports exceed the total of its exports in any one year. If exports exceed imports, it is known as a trade surplus. Forex. Foreign exchange markets facilitate the buying and selling of international currencies. Inflation. The rate prices increase in an economy over a year. The most common measure used by governments is the Consumer Price Index, CPI. This is a calculation of price raises in a basket of commonly bought goods and services. The inverse of inflation is known as deflation. This is a description of the very rare period where the general level of prices is falling. Recession. When an economy is going through a difficult period where GDP is falling. Typically, this is defined as 2 consecutive quarters of negative growth. Fiscal policy. Government actions which aim to influence economic activity using decisions on levels of taxation and public spending. Monetary policy. Actions taken by governments and central banks, for example, the Bank of England and the Federal Reserve, to influence economic activity using the levers of interest rates and money supply.